And as the businesses move into operational profitability and cash generation, then we'll be able to invest more of that into growing the businesses even further. So we see this as a big opportunity here, and we're just at the start of the journey.
Hello, you're watching Proactive. I'm joined by Martin Higginson. He's the CEO of Huddled Group. Martin, very good to speak with you. You're up with your interim results today. Before we get into those, for viewers not familiar with the company, tell us a little bit about Huddled, what you do, and your overall mission.
Yeah, hi Stephen. Thanks for having us. Look, so Huddled was set up following the sale of Emotion last year, and basically our focus is on saving surplus stock from going to waste. And then in doing that, we're able to then offer that to consumers at a huge discount to sort of normal retail prices. So 3 brands: Discount Dragon, focusing on food and alcohol; NutriCircle, focusing on healthy eating, protein bars, protein shakes, whey powders; and Boot Beauty, focused on the cosmetic industry, all with a single aim of stopping stuff going to waste.
Martin, it looks like a period of strong growth for Huddled. Take us through some of the highlights of the first half.
Yeah, look, we're really pleased with the growth so far. 123% quarter on last year's half year, so up to sort of circa 5.3 million of revenues, mainly driven by Discount Dragon. Discount Dragon is obviously the oldest addition to the Huddled family, and really strong growth in Discount Dragon, but not to be undermined by NutriCircle, which has come on and continues to grow. September will see revenues of sort of 225,000, its best month to date. And what's worth noting is we've had to sort of throttle September back, just due to sort of not being able to sort of process the orders. That'll be sorted as we move into a centralized warehouse, but you can see the growth of that. And then Boot Beauty, we acquired a couple of months ago, launched it September 12th. And we've been really encouraged by not only the growth in eyeballs on the site, the visitors to the site, but also in the number of orders has sort of taken us a little bit by surprise. So we're busy now running around getting more stock for that business. So all in all, everything's moving in the right direction. More investment in stock ready for the busy Q4 period as well.
You mentioned that you added NutriCircle and Boot Beauty to the portfolio, Martin. How do these acquisitions fit into your broader strategy?
Well, look, but both are very much in line with our strategy. NutriCircle was originally called Food Circle Supermarket when we acquired it. They were a relatively broad church in their ambitions, but due to sort of cash constraints, they'd really focused in on the healthy living, protein bars, protein shakes, whey powders area of the business, and we've seen that grow rapidly. So we rebranded a little while ago to NutriCircle so that the branding fit more with what they were selling, and that's really taken the business into another level. Customers know exactly what they're doing, what they're buying. We see great repeat purchasing, great intent from consumers, and as I touched on earlier, we're now outstripping what the current warehouse can do in terms of fulfilling orders. So we're having to sort of throttle back the marketing somewhat, which is a nice challenge to have, but obviously a challenge that we don't want to last too long. So that will move into our centralized warehouse in Leigh ahead of the original expected January. So we'll move that in mid-October, and that will really help us to open the floodgates for the rest of the Q4 period. And Boot Beauty, we opportunistically we found that business. It was clearly starved of cash in terms of its balance sheet and in terms of being able to buy stock. We've managed to get the stock in there. We've managed to get marketing for it. Very early days, but we are really encouraged. And how does it fit in? Well, there's 3 billion pounds worth of beauty products go to waste, the vast majority of which are all fit for use. So I think we're tapping into a market that is ripe for exploitation.
Martin, you mentioned in the results statement that it's been a period of investment for the group. Can you tell us where you've invested and why?
Yeah, look, we have 3 pillars. So stock is obviously the starting point of our investment. So we've got to have the right stock, whether it be Discount Dragon or NutriCircle or Boot Beauty. We've invested in stock. We continue to invest in stock. We've invested a lot in alcohol for the busy Christmas period, and we're also investing in cosmetics for the busy Q4 period as well. Then it comes on to sort of marketing, and as we touched on in the statement, we did some tests on TV advertising for Discount Dragon in early August. We learned a lot from that. We managed to remove the minimum order threshold that was facing consumer feedback. We managed to improve the UX, the user experience of the site, the checkout. We made it easier, and all of those things have resulted in better average order value and better margins. And better margins are driven by us buying more stock. And then ultimately, it then comes down to fulfillment. We've invested a lot in fulfillment and a centralized fulfillment center. All the businesses will operate from that fulfillment center as of mid-October. So a lot of investment's gone into there. But obviously, the quicker we get stock to you, then not only the quicker you're going to consume it, but the happier you are. So that helps build trust, and it really helps build this sort of virtuous circle. And the larger we grow, the more stock we can buy, and therefore the better the margins.
So after that strong first half, Martin, what are your plans for the second half and beyond?
So we're looking forward to a strong second half. We will continue to grow our marketing numbers. We're seeing a lot of repeat customers, which is great. Discount Dragon, 74.4% repeat customers. NutriCircle is ticking up. We see that will hit similar numbers very shortly. We're seeing a lot of attraction into beauty. So that's very early days for that, but we see that growing rapidly. And as the businesses move into operational profitability and cash generation, then we'll be able to invest more of that into growing the businesses even further. So we see this as a big opportunity here, and we're just at the start of the journey.
Well, Martin, I hope you'll keep us abreast of that journey. Thank you very much for speaking to us today.
Thanks for having us. Good afternoon, Stephen.
That's Martin Higginson. He's the CEO of Haddold Group.